With the 2024 American election around the corner, uncertainty is in the air, and the stock market doesn't particularly like uncertainty. But smart investors see this as an opportunity to prepare their portfolios strategically. Today, we're not diving into political predictions. Instead, we're focusing on what matters to you as an investor. How do you navigate the market volatility that typically surrounds an election cycle? In this video, we'll cover actionable tips and strategies to help you protect your investments and even capitalize on the opportunities that arise during this period. Before we dive in, show your appreciation by clicking the like button, subscribe to the channel, and turn on notifications for more valuable content. It's important to recognize that while elections create short-term market volatility, they do not fundamentally alter economic dynamics overnight. Historically, markets have experienced fluctuations around election cycles, with short-term price movements often driven by investor sentiment rather than concrete policy changes. The key is not to react to the market temporary swings, but to anticipate how policy shifts may shape long-term growth opportunities. Investors should focus on policies that matter most for the market: tax rates, regulation, energy costs, interest rates, and inflation control. While both Kamala Harris and Donald Trump bring distinct approaches to governance, understanding which sectors align with their goals and manifestos can guide your investment strategy in the months leading up to and following the election. Now, let's explore the sectors likely to benefit under Kamala Harris. Firstly, we have the green and renewable energy. Kamala Harris has made it clear that a central pillar of her platform will be the continued advancement of clean energy initiatives, a path she inherits from the Biden administration's aggressive climate agenda, with policies like Inflation Reduction Act, or IRA, paving the way for billions of dollars to flow into renewable energy infrastructure. Harris is likely to double down on investment in green technologies. Expect growth in solar, wind, electric vehicle production, and battery technology companies. This surge in funding will make companies involved in solar panel manufacturing, wind turbine production, and green infrastructure particularly attractive for long-term investors. Firms like First Solar, Next Era Energy, and Tesla could be at the forefront of this transition, as government subsidies will lower costs for these businesses, increasing profitability. Moving on is the healthcare reform. Healthcare is another sector where Harris will likely pursue aggressive reforms. The goal will be to expand affordable healthcare, reduce drug prices, and improve patient access, building upon the Affordable Care Act. For investors, this could mean growth in the pharmaceutical sector, as Harris may push for expanded drug coverage and more affordable medication options. Companies like Pfizer, United Health Group, and CVS Health could stand to benefit. Additionally, firms involved in telehealth and digital health platforms could continue to see increased adoption due to Harris's commitment to improving access to healthcare through technology. Companies like Apple and Tesla, which have international exposure, could be more favorable under a Harris administration. Thirdly is the technology and semiconductor manufacturing. Technology stocks have traditionally performed well under Democratic administrations thanks to their emphasis on innovation and infrastructure. Harris is likely to support further implementation of the CHIPS Act, which aims to boost domestic chip production to reduce reliance on foreign manufacturers, particularly in light of the recent global supply chain disruptions. Investors should watch semiconductor companies like Intel and Nvidia, which stand to benefit from increased government spending on domestic chip production. This also opens opportunities in sectors like AI, cloud computing, and 5G technology, as the demand for cutting-edge tech grows in tandem with government incentives. Another aspect is the clean transportation and infrastructure. In line with her renewable energy agenda, Harris will likely expand the federal government's investment in clean transportation, particularly electric vehicles and infrastructure projects like charging stations and public transit. Companies involved in producing electric vehicles, such as Ford and General Motors, which have already begun making strides in this sector, could see increased support from the federal government. Infrastructure projects will also benefit construction companies and material providers. Moving on to sectors likely to benefit under Donald Trump, we have the fossil fuels and traditional energy. In contrast to Harris's green agenda, Donald Trump will focus on boosting the US's traditional energy sector, with policies that favor oil gas and coal production. If elected, Trump is ready to roll back regulations on drilling and fracking, encouraging increased fossil fuel production, much as he did during his first term. Companies involved in oil exploration, drilling and energy production like ExxonMobil, Chevron and Halliburton are poised to see significant gains under Trump's policies. Additionally, Trump's push for energy independence could benefit pipeline companies, refineries and related infrastructure projects. Secondly is the real estate investment trusts, or REITs. Trump's background in real estate suggests that his policies will be favorable to this sector once again. During his first term, Trump enacted significant deregulation and tax cuts that benefited real estate developers, and is likely to pursue similar policies if re-elected. Expect a continuation of tax breaks for property development and capital gains, which could increase profits for investors holding REITs. Companies like Prologis and Simon Property Group, which are large players in the commercial and industrial real estate sectors, could see their stocks rise as a result of Trump's pro-real estate stance. Another one is low-tax environment. Trump's focus on maintaining a low-tax environment is central to his economic strategy. He has indicated that he plans to cut corporate tax rates further, lower personal income tax, and potentially eliminate capital gains tax for certain investments. This creates a pro-business environment that can drive growth in capital-intensive sectors such as manufacturing, industrials, and financial services. Banking and financial services companies like JP Morgan, Goldman Sachs, and Bank of America could see increased activity in an environment of lower taxes as businesses look to expand operations and take advantage of lower regulatory barriers. Lastly, defense and national security. Given Trump's previous tenure, defense stocks are another area of interest for investors. Trump's emphasis on rebuilding the military and investing in national security could lead to increased defense spending, benefiting companies like Lockheed Martin, Northrop Grumman, and Raytheon Technologies. Trump's America First policy, which focuses on reducing reliance on foreign military goods, will likely drive demand for domestically produced defense technologies. Investors should consider defense stocks as a long-term bet under a Trump administration. Neither Harris nor Trump has direct control over the Federal Reserve, but their fiscal policies will undoubtedly influence how the Fed manages inflation and interest rates. Under Harris, we can expect policies that aim to protect the Inflation Reduction Act, and this might keep inflation at bay while encouraging investment in infrastructure. Trump, on the other hand, is likely to focus on spurring growth through tax cuts, which could lead to higher inflationary pressures but stimulate business expansion. Investors should closely watch inflation-sensitive sectors like commodities, real estate, and bonds. Consider investing in Treasury inflation-protected securities, or TIPS, or commodities that act as hedges against inflation, such as gold. To ensure that your portfolio remains resilient regardless of who wins the 2024 election, diversification will be critical. Here's how you can strategically position yourself for different outcomes. First is the energy portfolio diversification. One of the key strategies for investors is to maintain a balanced energy portfolio. Kamala Harris's potential win could be highly favorable for renewable energy stocks, while Donald Trump's policies will likely boost fossil fuel companies. Investing in a mix of solar, wind, and traditional energy sectors will help hedge your bets. Secondly, we have the healthcare stocks for both administrations. Healthcare is another sector that could benefit under both Harris and Trump, but with different approaches. Harris will likely push for expanded healthcare access and lower drug prices, which will support companies like Pfizer and United Health Group. In contrast, Trump is expected to favor deregulation, benefiting insurance companies and private healthcare providers. Investors may consider CVS Health or Anthem Inc. to capitalize on Trump's potential healthcare policies. Another sector is tech and chip manufacturing. Technology and semiconductor stocks are likely to perform well under either administration, but for different reasons. Harris is likely to continue Biden's focus on domestic chip manufacturing through the CHIPS Act, which would benefit Intel, AMD, and Nvidia. Trump's pro-business stance and tax incentives could also encourage growth in the tech sector, particularly in AI and cloud computing, making companies like Microsoft and Amazon attractive options. Lastly is the real estate investment trusts, or REITs. Under Trump, Investors should expect favorable conditions for real estate due to deregulation and tax incentives. The real estate investment trusts focused on commercial and industrial properties could be particularly lucrative. Look for opportunities in companies like Prologis and Simon Property Group. On the other hand, Harris might support sustainable and green real estate initiatives, so rates involved in green buildings or sustainable development could see a boost as well. With real estate always being a sector sensitive to interest rates and inflation, the question of whether you should invest in rates or direct real estate depends largely on your tolerance for risk and the political landscape. Under Trump, real estate will likely benefit from deregulation and tax incentives that make it easier to develop and flip properties. Investors in rates, particularly those focused on commercial and industrial properties, could see higher returns as businesses take advantage of looser regulations. Harris, on the other hand, may prioritize affordable housing and green building standards, which would push rates to focus on sustainable real estate development. Investors looking to hedge against inflation may want to focus on real estate segments that can adjust rents in response to inflation, like multifamily housing or commercial properties that are in high demand. Geopolitical risk, particularly trade tensions and international relations, will vary dramatically depending on the election outcome. Trump has been known for his protectionist policies and trade wars, especially with China. Under a Trump administration, sectors that rely heavily on imports, such as technology and manufacturing, may face increased tariffs and supply chain disruptions. Investors might need to focus on companies that have domestic supply chains to mitigate this risk. Harris, conversely, is more likely to pursue diplomatic solutions and international cooperation. Investors who are bullish on globalization might benefit from sectors that rely on foreign trade, such as automobiles, consumer electronics, and technology. Companies like Apple and Tesla, which have international exposure, could be more favorable under a Harris administration. No matter who wins the 2024 election, the important thing is to remain focused on long-term strategies rather than short-term volatility. Elections create uncertainty, but as history shows, markets tend to recover quickly after the dust settles. By diversifying across sectors that are poised to benefit from both candidates' policies, you can ensure that your portfolio remains well-positioned for the future. Thanks for tuning in, and don't forget to like, subscribe, and hit the notification bell for more investment tips and strategies. See you next time.